Peter, you want to give us just a background on what is the gift and estate tax and how does it work?
So the gift and estate tax was really two different taxes that are integrated. There's the gift tax and the estate tax. So the gift tax is a tax on lifetime transfers. So if you make a gift to your daughter, you give a house to your daughter, for example, that implicates the gift tax. The estate tax is a tax on transfers when you die. And so if you leave assets to your daughter on your death, that implicates the estate tax. And so the key thing is that both of these taxes share a single unified exemption amount, lifetime exemption amount, which is in 2025, $13.99 million per donor. And so most people don't pay gift or estate tax because they stay below that almost $14 million lifetime exemption amount. But for people who are going to be above that amount, assets that are passed on beyond that $13.99 million exemption amount are taxed at 40% federally and at effectively up to 12% outside of and by the various states that have their own state estate taxes. So there's a dozen states in DC that impose an estate tax of their own. So it's a pretty significant tax for people who are going to be affected by it.
And I think the other important piece to call out is it may or may not change. And really, again, so Peter's calling out who this applies to, and that kind of threshold where it may apply to you may or may not change. You've got some likelihood of that things may not change, but do you want to give a little bit of context on that, Peter?
Yeah, so basically the exemption amount used to be about half of what it is now, inflation adjusted. So it used to be the equivalent of about 7 million. But in 2017, Congress passed the Tax Cuts and Jobs Act, which doubled the exemption amount from that level to the current level. But because of the way the law was passed through budget reconciliation, it had to expire after a certain number of years. And so that expiration is coming up at the end of this year. So December 31st, 2025. And so under current law as it exists, the exemption amount is going to be cut in half from about 14 million to about 7 million, which is going to ensnare a lot more people if it happens, because there's a lot of people in the 7, 8, 9, $10 million wealth range. That could be pretty significant. Republicans want to extend the current levels beyond 2025. And so if they're able to get that passed, then the current levels will continue for however long. But if it doesn't happen, then the exemption amount is going to go down to about $7 million per person.
Yeah, and just to give what is the implications of this? Let's say you had a $20 million estate, you hadn't used any of your exemption. If it keeps the current exemption about 14 million and you're gifting that to your kids, you'd owe the gift or estate exemption, depending on when you give that, on $6 million. The difference between the current exemption of 14 million and your $20 million exemption. This is assuming you're single. So you'd owe 40% of that in taxes. So roughly $2.4 million. Now, on the other hand, let's say the exemption did drop, then that number you would owe that 40% tax on $14 million, which is roughly $5.6 million. So it's a significant increase. Am I missing anything there, Peter?
Yeah, the other piece is that when you transfer assets out of your estate by gift, for example, to a trust, not only are you getting that dollar amount out of your estate, you're also getting the appreciation out of your estate, the future appreciation. And so one way of thinking about it is that incremental $7 million of exemption is worth 7 million times 0.4, since it's a 40% estate tax. But another way of thinking about it is that if you use that full 7 million incremental amount and that grew to be $30 million by the time you died, really what you'd be saving is 30 million times 0.4, which is 12 million. And there's ways to leverage it even more, but it's potentially just worth a lot of money.
Yeah. And then two final bits on this is, so obviously there's that upfront tax. And then I'm just going to assume everyone on this webinar understands the value of compounding. So that tax that you owe today is obviously worth a lot more in the future. So every incremental dollar you avoid in taxes creates a lot more wealth down the line for your kids in the future. And I think potentially the last and most important point is the gift and estate tax is, correct me if I'm wrong, Peter, it's the easiest tax on individuals to minimize or completely avoid.